income tax, we have totally 5 heads of incomes, which are arranged in this sequence. The first one is income from salary, income from house property. So these are the 2 heads of incomes, what you would be studying in this semester. And of course, the remaining 3 heads of income, which includes profit and gains from business and profession, income from capital gains, income from other sources, you would be studying in the next semester. So in this semester, you study primarily only the 3 heads of income. So whenever we begin a new head of income, something which needs to be discussed is what is the defining criteria, or on what basis do you classify the specific transaction under a specific head of income? On what basis? So the moment I say a financial transaction, that I've received so much of money from so and so person, you should be in a position to conclude as to which head of income this transaction should be chargeable. So that is the very basic foundation which you should be strong at. So in order to be strong at fundamentals, you should first learn the defining criteria, which you have learned in the first chapter, income from salary. Now you're quite confident which transaction will come under salary and on what basis the transaction comes under the head income from salary. So that inputs, insights you have already gained, and it was quite evident from the results of the tests which were conducted recently. So by and large, most of you have some idea that any income will be chargeable under the head salary if it satisfies, even though there are a couple of criteria, but the most important criteria of all the criteria is that there should be employee and employer relationship. If this relationship is proved, then such transaction will be taxed under the head income from salary. But if this relationship can't be proved, then such transaction cannot be taxed under the head income from salary. So we have already discussed all these provisions in detail. Similarly, every head of income, whenever you start, whether this semester or coming semester, you have to always understand the basis of charge. On what basis are we classifying a particular transaction in this particular head of income? So again, when it comes to income from house property, again there are some defining criteria which will help you to understand what is the basis of categorizing an income under the head income from house property. But before that, let me read out a couple of transactions, and then probably you people just tell whether it is taxable under house property or not. So let me give you list of transactions. I have a house in which I am staying. I am the person who's in charge of the entire house property. There are 3 floors in this. So I'm staying in the ground floor, and of course there are another 2 more floors which I've given it on rent. And the original registered documents are in the name of my father. According to the documents, he owns the property, but he is not here in India, he is in US. So I'm the one who is in charge of this property. I'm collecting rent from my tenants. So the rent what I collect from my tenants, is this income from house property or not? What is your opinion? So this is the first transaction. Now, transaction number 2. Let's also assume that I own a plot of land. I have the land in my name, and I'm not using it at the moment because I've just left it as it is. And some of the people in the neighborhood where my land is there, where I have my land, they approach me and they tell me that anyways you're not using this land, can we use your land for parking vehicles? So next to my land there's an apartment, And unfortunately, apartment, there is a shortage of space for parking. So this apartment association, they approach me and they ask me, can we use your vacant plot for parking our vehicles? So I think, okay, why not? Because anyways, if I keep the land vacant unnecessarily, grass, bushes, all that will grow. At least if vehicle comes, the land will be in a proper condition. So I say, yes, you can use it, but of course, not free of cost. Pay me 10,000 rent. So the apartment association agrees to pay 10,000 to me for using my plot of land, which otherwise was not being used. So they are paying me 10,000 rupees for using my land. So now the question is this income from house property, the rent what I'm getting from my vacant plot of land, which is not being, which was idle all these days, and now it is being used for parking purposes, and I'm getting rent from this land. So the rent what I'm getting from this vacant plot, which is being used for parking of vehicles, is this income from house property or not? Some more transactions. Let's assume you have a house, it's your own house, you're staying in that. Or what you have done is you have given it to me on rent. You're the owner of the house, I'm your tenant. It's a very big house, and I'm staying for the last 5-6 years, so you're quite happy with my dealings with you because I always pay rent on time, I'm very prompt, and the property is also well maintained, so you're quite satisfied with me being your tenant. But unfortunately, because of this lockdown, what happens, let's say my income is also hit, and now I'm thinking, how do I compensate for the loss of income? So one of my friend who is in need of a house, I talk to him and I say him, anyways, you're looking for a house, and if you buy a house independently, anyways it will cost you more. Why don't you share the house with me? I'm anyway staying in the house. Why don't you share the property with me? So you take one room, you can use the common facilities of the house, and you just pay me 5,000 rupees per month as rent. So now what has happened in this situation is I myself is a tenant. It's not my house. Of course, I'm also paying rent to my landlord, which is you. But I'm giving this house, a part of this house to my friend to stay, and I'm collecting rent from him. So is this also income from house property? Or is this not an income from house property? The rent which I'm getting from my friend for giving a portion of the house for him to stay in. So I'm collecting rent from him. So I'm also earning rental income. So in order to answer all these questions, of course, we also have some more questions that needs to be answered. We have to examine the provisions which you see on your screen, which is section 23 to 27. Once we are familiar with all these provisions, you will be in a position to answer any kind of transaction confidently. So what are the provisions? In order to consider any income or any transaction as income from house property, what are the provisions? So let's study these provisions. And then once I explain these provisions, all the questions which I have asked you, you reflect on those questions, I'll recall them. And then you tell me whether what you had answered, whether it was correct or not. So one of the important provision is the first provision that will make half the questions clear what I have asked you. In order to consider any transaction as house property income, one of the most important criteria is there has to be a building. One of the important criteria is that there should be a building. When we say there should be a building, obviously in a vacant plot, there is no building as such. I gave you an example in which I said I have given my plot on rent to apartment association to park their vehicles. But the first defining criteria itself says that in order to consider any transaction as house property, there should be a building. The property must consist of a building or buildings. In my example, I did not have any building as such. It was just a vacant plot of land. So this first point itself indicates us that any rent received from a vacant plot, ground, is not taxable under the head house property. Because in order to consider a transaction under the head house property, there should be a building. In a vacant plot, obviously there is no building. So vacant land, plot, ground, all these incomes from these sources will not be considered as income from house property. So rent received from ground, rent received from vacant lot, if it is not an income from house property, then what it is? That's a different question that we'll discuss little later. But for now, it is not an income from house property. But the point also says it's not just the property should have a building. It also says or land appurtenant thereto. Now, what this part of the sentence means is that there can be a property. There can be a property. I mean, the property should have a land, or a land which is attached to a property. So any rental income derived from a land attached to a property, when we say property attached to a building, that is also considered as income from house property. But both should be inseparable, right? It's not like that you have a house in Shantinagar and you have a land in Majestic and you're saying, no, this is both income from house property. If there is a land which is associated with the house, and if you're deriving income from the entire property, that entire income is house property income. Even though you might say that there is a land also, but since the land and house property are attached to each other, so that is also income from house property. So this is the first important condition that you have to always look for, whether there is a building or not, whether there is a building or not. So this condition is extremely important. Now, second important condition, which will again answer some of the questions which I had raised. The assessee should be the owner of the land. So second important question, the assessee should be the owner of the land. Now, pertaining to this, I had asked you two questions. The one question I said, one scenario what I gave you is that I have taken the house on rent from you, and part of the house I have given it to my friend to stay, and I am collecting rent from him. So the income which I am getting from my friend in the form of rent, what I am collecting from him, can't be income from house property for a simple reason. I'm not the owner of the house. So in order to consider any income as a house property income, you should be the owner of the house. That's important. So in our scenario, I was taking the property on rent. I had taken the property on rent from you. I was paying rent to you. So the rental income, what you receive is income from house property. But a part of the house, I had given it to my friend to stay in that. But unfortunately, that income cannot be considered as house property income because I am not the owner of the house. So such income which I am getting is called income from subletting. The transaction is called income from subletting, and any which ways it will be taxable in one or the other head. So it will be taxable under the head other sources. But the point is it can't be taxed under the head income from house property for a reason that I am not the owner of the house property, right? So that you should be very clear, right? Another example I gave you in which I said the first scenario I said, I am staying in a house and I have given 2 floors of the house on rent, and I am the one who's collecting the rent. I am the one who's in charge of the house, but actually the owner is my dad. The documents of the property is in my dad's name, and he stays in United States of America. So what about this? What about this transaction? So the income which I am getting from those 2 tenants who are staying in the first floor and second floor, they are paying rent to me. So would that be income from house property? Chargeable to tax on my name, or is it taxable for my dad? So the provisions of Income Tax Act says registered ownership is not necessary. Registered ownership is not necessary. So what it says is where a house is handed over by the owner, right? The moment you hand over the house to the purchaser or the builder, or the contractor. So there are many points here that needs to be noted. So sometimes you will see, you will buy an apartment, you will become owner the moment you buy it. But by the time the registration is done, all that is done, it takes a lot of time. In this case, if you have bought an apartment, still the registration has not happened. In this case, you are the owner, but the property is not in your name. It is not registered in your name. In this case, it is fine. You will be still be considered as owner in the eyes of income tax department. Even though you might say, no, I don't have the property documents registered in my name, but you're the purchaser, you have bought the house, so you're the owner. But in the example, what I stated, in which the property is in my dad's name, but I'm the in charge of the house. In this case, the rental income is still taxable in the hands of my father, not me, because the registered document is not in my name. Keeping this argument, keeping this in mind, you can't argue in the case of apartment. Let's say you have bought an apartment, you purchased it, but the seller of the apartment has said, sir, it will take at least 3 to 4 months for the document formalities to be completed. The property will be transferred, of course, in your name, but the registration will take 3 to 4 months. Meanwhile, what you do, you don't want to stay in that apartment. You just bought it for the sake of investment. You have given it on rent. And 4 months rent is already being generated. In this case, you cannot argue saying that no, the property is not registered in my name. Income tax department says, even though the property is not registered in your name, but you have purchased the property, so you are the owner, you are liable to pay tax. Okay, so the bottom line is, in order to consider a particular transaction under the head income from house property, second important condition is that you should be the owner of such property. So this is also an essential condition. Now, third important point is that the property should not be used by the owner for the purpose of any business or profession. What it means, now sometimes you will see property being used for both. Sometimes there's a conflict, there's a both. Let's say you're a person who has 2 shops within your own property, and behind 2 shops there is a house. Sometimes we see doctors also have a clinic within their house itself. But here the law says clearly that the property should not be used by the owner for a purpose of any business or profession. What it means now? First of all, it does not mean that as a owner of the property, you should not give the property on rent for business or profession. Of course, you can give. You can give the property on business and profession. The tenant who is coming to your property, he can do business also, he can do profession also. That is income from house property, because you have given the property on rent. What the tenant is doing, some properties are in the form of house property, some property are commercial. That does not matter. What matters here is what the point states here is that you can't do business or profession. The reason why this point is being highlighted is because if you do business and profession, it becomes part of your business and profession. It becomes your business property. It becomes your business property. And you should record this in your balance sheet, right? If you're using a property for your business, of course it becomes your business property. It will go to balance sheet. If you're a doctor, if you own the clinic, it is an asset to you. So therefore, the provision says here is that if you're an owner of the property, you can't use the property for the purpose of business or profession. If you use it, then it will not be considered as house property. It will be considered as a business property, right? So that's the point. Now, fourth is something which is extremely important for us from the viewpoint of doing the calculation, from the viewpoint of computing income from house property. The fourth point tells us that income from house property, the taxable amount is not the rent what you receive. Now you might be wondering, income from house property means rental income. The rent what you're getting from your tenant is called income from house property. But the answer is no, because The provisions, what we are discussing here, says that the tax on income from house property is not payable on the rent what you're getting. No, the tax is payable on NAV after deductions. So what it means is, you might be wondering, okay, income from house property is simple. The rent what you're getting from your tenant is house property income. Technically, it is correct. The rent what you're getting from your tenant is a house property income, but it is not the taxable income from house property. In order to calculate taxable income from house property, you should compute this NAV, net annual value. Net annual value. Okay, so one of the important tasks in this chapter for you is to calculate taxable income from house property. And you know, in the fourth point, it clearly says that income from house property is taxable on NAV after deduction, which means it's not taxable on the rent received, but it is rather taxable on NAV. So you should learn the procedure to compute NAV and to compute final taxable amount under the head income from house property. So in order to calculate NAV, the procedure of calculating NAV is different for let out property. First, you have to figure out what kind of property it is. Then self occupied property, the procedure is different. And for a deemed to be let out. Now, what is this deemed to be? This is a special category, deemed to be let out. And the procedure for this deemed to be let out is different. What is a let out property? By reading this itself, you can know that it's a property which is given on rent. So there is no explanation required for this. For this also, there is no explanation required. Self-occupied property is occupied by the owner for himself. What you need to understand is this. What do you mean by deemed to be let out property? The procedure of calculating NAV depends on whether the property is a let out property, self-occupied property, or deemed to be let out property. So there are minor changes in the calculation of NAV. So how NAV is calculated, since we are having only limited time left out, so we can't have NAV procedure discussed because it will take at least 1 hour for me to explain you the computation of NAV. So we will stop here. So all you have to understand from the discussion of today's class is that in order to consider any transaction under the head income from house property, these 4 conditions are essential. So if these 4 conditions are, I would rather say 3 conditions, because 4th one talks about the procedure to calculate. So first 3 conditions are met, then of course it is income from house property.
Sir, in the first case, you did say that the house, the first floor of the house was used to a personal purpose, and other two were rented, right?
Yes.
Sir, in that case, it is chargeable, no, sir. It is under the house property, right? The other two
Exactly.
floors.
It is income
Yeah.
from house property, but I said I'm not the owner. I'm just given the charge by my dad to collect rent
Yeah.
and hand over the money to him. So in this case, what will happen? I'm not liable to pay tax. Since the property is in my dad's name, he's liable to pay tax. Even though my father would have said, son, this is your property only, you only keep it. Anyways, you will get this property in the future. So you keep it, you use it. Officially, it's not being transferred to my name. So still he
Yes,
remains
sir.
the owner. But you can't use the same rule in this case, the rule which I have used, to the rule when it comes to, I gave you another example of apartment. You buy an apartment, still the registration is not done. But you have bought the house. So there is a transfer of ownership. But the property, the ownership is transferred from the viewpoint of sale. As per the sales deed, you're the owner. But when it comes to registration of the house, from the property tax viewpoint of view, you are still not registered. The house is still not registered. So in this case, what happens is the law says even though the documents are not registered in your name, but you are the owner because you have bought the property. So you are liable to pay tax. Any income generated in the form of rent will be taxable under the head income from house property and you should pay the tax. So one of the important criteria is that ownership. Ownership is a must.
So in the first point, you have given us an example of a transaction where a person can earn income from empty land where he'll be getting
Yeah,
amount for
correct.
parking. So,
Yeah, go on.
for that purpose, in that case, will that I mean, like it has to consist of building, no sir. So will that be taxable? That income, will that
There is no
be
building.
taxable?
In my example, there was no building. It was a vacant plot.
Yes, sir. So it won't be taxable under income from house property.
No, income from house
Okay.
property is not taxable. If you're generating rent from a land, from a vacant lot, from a site, from a ground, it is not taxable from income from house property because income from house property, the first condition says building should be there.
Okay.
Where is the building? There's no building as such here. It's only a vacant plot. And therefore, two things will happen. Either this will be taxable under the head business or it will be taxable under the head other sources. Now, finally, which one should we tax, business or other sources? For that, we need some more evaluation. So some more data is required for that, based on which we'll finally decide whether it is business or house property. But at the moment, from the viewpoint of house property, it is not house property income.
Okay, sir. And also one more question, sir.
Yeah.
For the third point, sir, where you said uh, the owner, like if the owner uses it for business and profession, will it be taxable or no, sir?
That property is not considered as house property. It will be considered as business property is the point. So if
Okay.
I am using my, let's say I have a building, it's a house which I have in Chickpet. I used to stay there, but what has happened is the first two floors I am using it for storing goods. I waited a go down. Of course, in the third floor I stay. So from the viewpoint of income tax, it says since you're using the property for business, it will not be considered as house property. It will be considered as business property. Now you might argue, sir, what about the third floor? The third floor, yes, it's a house property. So we have to apportion it. The percentage which you not using for house and using it for business, that becomes a business property. So in my example, first two floors I'm using for go down. So that becomes my business property. I can record the worth of those two floors in my balance sheet and show it as building under assets. But the third floor, I'm staying in that. It's my self-occupied property in which I have a residence. I stay there. That is a house property. So that cannot be shown in balance sheet as business property. So you have to bifurcate wherein you are dividing the premises for residence plus business. You have to apportion it according to the usage. But if it is exclusively used for business, then it becomes a business property. Now, the reason why we have to do this, now you might be wondering, sir, what is the logic of point number 3? Because in my example, I am using property for go down and house. In both the situation, I am not giving it for rent. Are you getting my point? I am only staying in that. Then why this
Yes.
question of house property or not comes into picture here? The reason is house property is classified into 3 categories. First one, let out property. Second one, self-occupied property. Third one, deemed to be let out property. Even though you're not getting any rent from self-occupied property, but still there is some benefit you can get. If you have a self-occupied property, there is a benefit which you can get. That's the reason income tax department says if you're using house property for business purpose, it can't be considered as house property. The reason is because as even though you might not give the property on rent, you may be staying in your own house for your own purpose, still you get benefit. What is that benefit you're going to get? We will discuss that little later, right? We'll go step by step. And when I discuss that benefit of self-occupied property, I'll again explain you this point. But for now, you remember that if the house property is used for business or profession, then it can't be, right, considered for claiming benefit. What benefit is that? We'll discuss that little later. So the rule says the property should not be used for business or profession. But in case if you use it, then it is your business property. Record it in your balance sheet. Simple. Any other question? Anybody?
Sir,
Yeah.
sir, if there are three persons, person one is the owner of the land, legal owner of the land.
Okay.
He gives the property on lease to person B for a long period of time,
Yeah.
for a lump sum amount,
Okay.
and he lets out the property on rent to the third person on monthly basis.
Okay.
So what is the calculation for person one and person two? On what basis will it be calculated?
Very good. So you use the same provisions of section 22. Let's say
Sir,
you're the owner of the house.
yes,
You're
sir.
the owner of the house. You have given the house to me on lease for 50 years.
Okay.
By transferring the house or by giving it to the house on lease to me, will that make me the owner of the house?
For 50 years, yes.
The answer is it won't make me the owner of the house. It allows me to use the house for 50 years. It does not transfer the ownership. You will still be the owner of the house. If you're giving me the house on lease, I will not become the owner. I will become the user. Lesser, lessee.
Yes, sir.
Right? So you still remain the owner, but you have given the property to me to use it on a lease.
Yes.
So after getting the property on lease, if I give that on to rent and generate rent from it, it can't be income from house property for a simple reason that I'm not satisfying second criteria.
Yes, sir. That was
So
main
in this
thing
case,
was
what
about.
will happen is the rent what I am getting from this lease property will be taxable under the head other sources or business depending on the situation.
Okay.
But it will definitely not be income from house property because I am not the owner. I have taken the property on lease.
And even the first person cannot charge it as an income from house property
Can't be
because
because you're not getting rent at all.
you're not getting rent. Yes.
You have just given the property on lease. That means you have some lump sum amount. What you will do with that lump sum amount? You will keep it in the bank and earn interest. So again, interest from bank deposits will get taxable under the head income from other sources.
That's yes, sir. I got it.
Okay, so good that you're asking questions because the best way to understand the concepts is to ask questions and understand the concept practically rather than only understanding it from the viewpoint of examination. 69.
Sir, it is the owner of the land, sir,
Yeah.
where we have built 3 floors.
Don't get confused between NAV of mutual funds. Mutual funds also has NAV, net asset value, but this is not net asset value, this is net annual value. Which means that your task in this chapter is of computing this NAV. Because income from house property is taxable on NAV, not on the rent received. So therefore your job is to learn how to calculate this NAV and how to apply the deductions under section 24 to come to a taxable income from house property. So this is something which learning now as to how to calculate NAV. So these are the 4 important provisions pertaining to income from house property.
First 2 floor is for commercial purpose where we have rented out, and next third floor will be houses built. Then we can consider what the rent will get from 3 floors is also income from house property, or only the income from third floor will be considered as house property.
So if you are an owner of the house property, when you say house property, don't assume it as a house, right? The first point, what it says is the property must consist of building or building. Does it say the property must consist of a house? It doesn't say, even though the title of this chapter is Income from house property, yes, of course, there is a house word in the title, but when we look at the provision says that the property must consist of building. Now, whether you are giving this building, now what you said that one floor of the building has shops, another floor of the building has house. So whether you're getting rent from shop or whether you're getting rent from house, it is income from house property.
Okay, sir.
Okay, but again, this rule can't be applicable in some cases. For example, let's assume you are the one who owns Garuda Mall. You're the owner of Garuda Mall, you're the owner of Forum Mall, Forum Value Mall, so many malls are there. What do you do in mall? Same thing, you give shops on rent. Some shops are given on lease, so there is both concept. Some can be given on rent, some can be given on lease. How will you tax this as? Is this income from house property or not? This is for everybody.
Yes, sir. It is income from house property.
Are you sure?
Yes, sir. Because it's a building and it is given on rent on a commercial purpose.
Exactly.
Sir,
The court
from
had a
business
different
purpose.
argument. Court said, okay, you're a builder. Your job is to build shopping mall and give things on rent, on lease. So you have an element of business there. So therefore, it is income from business. It is not income from house property. So that was the verdict of the court. And therefore, all the shopping malls, right, which are constructed by big builders, whether it is shopping mall or whether it can be a software park or whether it can be a Manyata Tech Park, right? All this will come under the ambit of income from business, not income from house property. Because there you're registered as what? A business. Who has constructed this Forum Mall? Prestige Group. Prestige Group is a real estate company. Their business itself is that. So therefore can't be considered as income from house property. It is income from business.